Guys, in this video, we're gonna try to give you a few helpful tips to the most crucial question that any trader should be asking themselves before getting into the next trade. And you could be thinking, Leonardo, there's so many questions that I ask myself on a daily basis. What is actually the most important one? Well, guys, it is actually surprisingly shocking. The most important question is, what the fuck are you going to do if your trade starts going red? If the trade starts going against you? See, what I've discovered from talking to many traders is the fact that very few traders actually spend any time calculating all the possible scenarios what could actually go wrong with the trade. So what most of the traders are actually asking is, well, how much am I going to make on this trade? I mean, how much am I going to make on this trade today? How much am I going to make on it tomorrow, this month, this week, whatever? So everybody's just focused on making money. Instead, you should be analyzing all the possible scenarios of what could actually go wrong with the trade. So if it does happen, guess what? Cool heads will prevail. You'll be able to keep your composure and you will be able to react in the least damaging way to your account. And the only way I know how you can accomplish that is by actually doing your calculations ahead of time. Just make a promise to yourself that starting with tomorrow, you guys will actually look at all the possible ways of what could actually be going wrong with the trade. And more importantly, you know, everybody's got their risk tolerance levels, everybody's got different size of the account, everybody's got different expirations and so on. So you should be responsible for the action that you'd be taking, not just from the standpoint of how much capital you put in that risk, but what are you actually going to do if the trade is not going to go as planned. Now, let me just give you a statistic. Most of the time when I actually initiate the trade, in about 65% of the cases, because I'm trying to either nail the top or nail the bottom, okay, these trades are not going immediately in my direction. If you've seen a lot of my live trading videos, a lot of these trades, okay, it takes them a moment. The moment I actually purchase, let's say 50 contracts, I mean, a lot of times I show you the screen where I'm losing $1,000. I'm losing $2,000 right off the bat as soon as I'm actually getting into a trade. But you see what happens next. Within 35 minutes, an hour, a few hours, and by the end of the trading day, all of these losses are gone. Not only they're gone, you see a profit of $5,000, $12,000, $24,000, $38,000, whatever the case may be, from the live video that you guys have watched. So, see, that would have been totally impossible for me to accomplish if I were just freaked out. Oh my God, I just bought these contracts. Oh Jesus, I'm already losing $2,000. Let me hurry up and get the hell out of this trade. No, I mean, that would have been a total disaster. So just understand that as soon as you get into a trade, things will go wrong, and you shouldn't be surprised that all of a sudden the trade is going into the red. As a matter of fact, I don't believe that any trader in the world should be thinking like, okay, as soon as I'm going to put this trade, everything's going to be fine and dandy, and I'm going to pay cash for my house. That's a bunch of bullshit. Okay, so expect things to go wrong, but before you actually get into the trade, answer this most vital question of all questions is, what are you actually going to do if the trade starts going wrong? So let me share two very basic ways how you can handle it. One is just logical and simple. So the one way to actually deal with situations when your account is going in the red is simple. Cut the damn losses, okay? But what I've discovered from talking to a bunch of traders is a lot of guys, they just freeze. They're like, oh my God. The first type of trader actually just freezes, and they are afraid to hit the button because they're like, well, what if the thing is just going to bounce back? I mean, I don't want to get out right now. I mean, what if it's just going to bounce and then I can get my money back? Okay, so there's two very serious issues with actually doing this. Because if you freeze up, typically you shouldn't freeze up as a trader, because again, if you've done all your calculations done ahead of time, this should not be happening to you. So if you can relate to this situation where you're freezing and these losses on your screen are just starting to, look very frightening to you, it is because of two things. You haven't done your calculations and you don't believe in your trade. And if that's the case, you shouldn't have gotten into this trade in the first place. Okay, but this is what happens. A lot of traders that do freeze up, okay, this button on your computer or the button on your phone all of a sudden appears to be just so difficult to actually push. It's just no matter, like you're almost there trying to get out of this trade and then you stop and you don't do it. And the only reason that you can actually come up with, oh, it's gonna bounce, it's gonna reverse, let me just get my money back. The second negative aspect associated with this, guys, is even if the trade now is gonna reverse, all you're gonna do is you're just gonna break even. Now remember, you're not getting into the trade to just break even. You're getting into the trade to actually make money. So if the trade initially goes against you, and then it finally starts going the right way, well, the trader that freezes actually is in a state of mind now to where all he can think of, oh God, why did I take this trade? As soon as I'm gonna get to the break-even point, I'm out. And I'm never trading this damn stock ever again.
It's time to stop, okay? No more.
You guys know, you've done it, okay? So to avoid freezing, guys, you need information. You need more information. You need more conviction of why you actually get into the trade. So that's an easy solution to those of you guys that are freezing up. Now, the second type of trader that I typically talk to is the trader that just like the moment their account goes in the red, they just freak out. They're like, oh, that's it. I've had enough. I'm out of this trade.
Oh, hell no, I'm out of here.
And so that's a poor strategy too, because, hey, why are you getting out of the trade as soon as the trade goes negative? I mean, have you been into trades, guys, where you're so quick to cut these losses to where the next day you're sitting and that stock now all of a sudden is up 28 bucks and like, shit, why did I get out of this trade?
Oh, shit. Here we go again.
There is a fine line between cutting your losses, but not cutting them too fast, and understanding when to actually use the second strategy on how to fight your situation when your trade is going into the red, and that's actually adding to the position. The crucial denominator here is understanding, again, all the calculations and why you're taking the trade in the first place. So if you get clarity on that, you guys are gonna do substantially better. Now, with that said, everybody has different risk levels, so when we're talking about strategy number one is just simply cutting the losses. You should, ahead of time, decide at what level you're gonna be cutting your losses. So for some of you guys, your tolerance level may be, hey, if you're losing 5-8%, you're out of the trade. That's fine if you have made that decision ahead of time. For some traders, this point is about 50%. So for those of you that trade weekly options, let's say you invest in $500 into the trade, and you know the trade keeps bouncing, it's not going anywhere, and maybe now the contract is worth, instead of 500 bucks, it's only worth 250 bucks. So a lot of traders actually cut their losses there. It seems to be, generally speaking, it's just the point of no return, where a lot of traders just don't believe in their trade, and even if they've done a couple of basic calculations, they're like, they don't believe in those calculations anymore. They're like, man, it's a bad trade, I'm out. So oftentimes that's very dangerous too, because guys, you've seen me trade live. There's some instances, okay, where the trade does go negative 50%, and then I still lock 400, 500, 600%. So point number two is actually understanding when to add to the trade is essential. So you shouldn't be just jumping out of the trade because trade is temporarily not working out. Now, all of these things that I'm discussing with you guys right now should be put from the context of making sure that you never trade with just a single contract. I've mentioned in the prior video, if you haven't seen it, guys, you need to go and check it out very thoroughly in detail. The video I posted a few days ago about 5 ways of how to actually manage your trade. So your job as a trader becomes insanely difficult if you just trade with one contract. Just remember that. Trading with one contract, I mean, you have too much pressure on making the right decision. Okay, so trade contracts with pairs like 2, 4, 6, 10, 12, because that actually gives you perfect opportunity to stair step into the trade, stair step out of the trade, and when you're doing that, you're going to be able to respond in a much better way if the trade becomes negative. So that actually gives you a clear path to add to the position if all your calculations are good, nothing has changed, like no crazy news broke out that, oh, there's a takeover of the company. In other words, if all the calculations that you've done your homework on are still valid, then it makes sense to actually use the second strategy and add to the position. Now, most of the traders, actually the majority of the traders, they don't think about it because they're just so quick to get out of the trade. And the main issue with that is you could be getting out of the trades too quick, locking small losses, moving to the next trade, doing the same thing again and again and again. And you know what happens to the account in this case. The account just keeps gradually going lower, lower, and lower, and lower, because that doesn't work. Now that we've discussed the two basic ways and how you can actually react to your losses once you get into the trade, when the trade goes wrong. One is cutting the losses, but have a plan of action specifically at which level you're going to do it. And number two, add to the position if your calculations are still good and nothing has substantially changed since you've gotten into the trade. Okay, now with that said, I want to bring very important point here, and that is if you are stair-stepping in and stair-stepping out of the trades, okay, if the trade actually does go in the right direction and you own two contracts, always use this strategy when you're up 400-500% to actually sell at least half of the position. And the reason I wanted to bring this up at the end of this video is because now we had some guys that were up substantially on the Amazon trade. I mean, I've had guys that were buying Amazon contracts last week for like $3-4, and you know, they were selling them, you know, they could have sold them for $17-18, but they've stayed with the trade. And generally speaking, I mean, I don't know what everybody's size is there, but you see what I do when I trade live, as I actually start taking profits. You never see me just taking the entire position out. I always step out of the trade. You see me take some gains on 50 contracts, and I sell the other 50 contracts, and I sell the third part of the trade. So I step out of the trade. So as the trade begins to make money, some substantial traction, like 300-500%, you have to start locking some gains. That does not mean that you're not staying with the trade, but it just makes perfect sense, guys, to start locking some gains. Some of these trades are going to run 300%, some of these trades are going to run 500%, some of these trades, they're going to run 1200%. So if you think you're doing good at 300%, but you're already out of the entire position, there's no way you're going to make 1200%. I mean, does that make sense? So if you're trading, let's say, 6 contracts, then sell 2 once you start realizing 300-400%, sell the other 2 once you're up to 500-600%, and keep the last 2 contracts. So during the prior 2 weeks, I said stay with the Amazon trade and keep buying the dips. Okay, so when it goes down, you buy the calls. When it moves higher to a higher trading level of the tunnel, you sell some of the position, but not the entire position. If you use that strategy, guys, stepping in and out of the trade, there's no way that you're going to lose money. Okay, so buy the dip. Sell it, some of the position at least, start locking some gains once the gains are nice and healthy, and just repeat the process. It's that simple, okay? But I want to finish this video with this, guys. A lot of guys that I talk about this subject, they're like, look, I mean, what do you expect me to stay in the position? I'm like losing $3,000 in this thing. And the answer is, it's not about how much your losses actually are on the trade. It's about whether your calculations are valid or not. Okay, you could be down $3,000 on the trade, and you could be in the best trade of your lifetime. You just don't know it yet. So just because there is a loss, it doesn't make the trade bad or good at the point when you're actually looking at your account. But the only way to actually make a good decision whether you should be cutting that $3,000 loss, staying in a trade, or adding or maybe selling half of the position, stepping out of this trade slightly to minimize further potential losses. The only way to make that decision, guys, is based on the actual calculations that derive from the charts. Not something they talk about in CNBC, not something you heard from your buddy, none of those things. You should do your own homework, you should do your own calculations. And with that, I invite you to check out a Charts Divergence course, our 13 Markets Move Formula, which actually helps you discover on which days you should trade heavy, on which days you should trade light, and on which days you shouldn't trade at all. But please, whatever you do, before you take the next trade, make sure you have a solid answer to this very important question. What is your action going to be if the trade starts going against you? And I know the courses will help you answer that question. So take action, guys, so you can be the best trader you can be this year. Let's roll! From one hardcore bear to another, guys, you probably see me making a killing short in the stock market. But guys, there's time to be a bear and there's time to be a bull. Let me tell you a little story here. This bear right here is happy this morning. Do you know why? Because he knows the 13 markets move formula that allowed him to buy the dip timely, and now this happy bear is making a killing. Now, this bear right here, guys, sad as hell. Look at this. It's actually a shame to all of us bears, okay? Look what he's doing. This dude right here is drinking vodka and Red Bull. Shame to the Bear Club. But stuff like that happens, guys, because they're traders, they're bears. They just want to short the hell out of this market, but their timing is off. So if you're trying to improve in this level, guys, stop trading alone. Out there, trading alone. Guys, that's a scary game. I mean, without the 13 markets move forward, I don't know how would any bear by himself, one man only standing, would be able to take on the entire market, entire wild stock market out there. So I invite you to come trade with us using the 13 markets move formula style, which predicted the crash last year, which predicted the breakout in the markets to all-time highs this year. Click the link below, turn yourself from a sad bear into a happy bear so that you can make your trading account great again.
Great again.
Do it now, damn it. From sad to happy, very easy. Click the links below right now.